Quickie Forex, quick tips and tricks to improve your Forex trading and make you more money. In this quickie I want to talk to you about what I call the dead zone. This is the period when the market is the quietest and when the market liquidity is the lowest. And this generally happens during the Asian session. Now if you have a look at the chart I've got in front of me, I've divided it up into yellow, orange and white stripes. When I say yellow-orange, I mean this area here and the white stripes next to it. Now the yellow-orange area, this time zone here, represents the early European time zone going into the early New York time zone. So that would be around about 5 a.m. GMT, that's London time more or less, up to about 2 p.m. GMT, that period around there. Now you can work that out in Eastern time or whatever time zone you're in, but I'm talking about the 5 a.m. till roughly 2 p.m. GMT, and that covers the early European market through the London market, which is the biggest in the world and the most liquid, up into the early New York session when there are news announcements and whatnot going on in New York, which creates some market moves. So that's the yellow areas here. Those are the yellow zones, and you can see they're fairly narrow compared to these white zones. Actually, they're more or less the same. The white zones are the Asian session, and this Asian session really runs from the end of the New York trading day, that's Eastern time, let's say 4 o'clock in the afternoon Eastern time, through to the let's say from around about 4 o'clock Eastern time through to the beginning of the European session. So it covers the whole of the Asian session. This is when countries like Japan and Australia, New Zealand, and some of the Indonesian countries around there are doing their trading. That's the time when the market's the most illiquid, when there is the least volume going through the market and the least activity. Now, what I want to do with this quickie is just show you very briefly how the market moves in each of these sessions. And we'll just go back a few sessions and have a look. This one's a bit of an anomaly, so I'm going to conveniently ignore that one. But you can see during these yellow sessions, the market movement is generally much larger than the movement that takes place in these white Asian sessions. For example, there's a big move there, followed by a very tight consolidation. Not so much here. Well, we've got a smallish move and quite a big move in Asia. But there again, quite a big move during the European London time zone, and then quiet. Again here, quite a big move, and then quiet. Not so much that time. This is a generalization, remember. I'm not talking 100% of the time. I'm talking in general, probably 60 to 70% of the time. There's another big example during the European and early New York market, a big move followed by a consolidation. This is the euro, by the way. Then we've got another big move up here, right up to the top here, and then a sideways, slowly downward consolidation. There's another good example, in fact, where the Asian session did produce some action. There's the move. In fact, not really. There's the move, the big range that took place during the European and early New York session. Down, up, and down again, and then fairly quiet during Asia. Same thing here. Big moves, down and up, and then a fairly quiet period during the Asian session, and then we see the big moves again taking place. So this is a generalization. There's another example. Massive move taking place during the early London period and early New York period. Massive moves taking place. Look at that size of that. That's a couple of hundred pips, and then just this very quiet consolidation in Asia. There's one more example, and then I'm going to stop before I bore you. There's a big move taking place during Europe, London, and early New York, and then almost nothing happening during Asia. So why am I telling this? Well, if you can help it at all, don't trade during the dead zone. That's the Asian period, because the market's sideways and choppy, and most trading systems won't be able to capitalize on those very small moves, and often trading systems will fail during those choppy markets. If at all you're able to trade, then try and trade during the European London and early New York sessions, even if you've got to get up during the middle of the night, and perhaps just trade twice a week like I do, instead of wearing yourself out. Well, I hope you found this useful. Quick tips and tricks to improve your trading and your bottom line.